the stock market takes a sudden nosedive, it can send anyone into a panic. Our next guest is here to help us sort out what it means when there's a big market correction and how to protect our retirement money.
Welcome, Norm Shapiro with Blue Waters Financial to the show. Hello, sir. How are you doing today?
Wonderful.
Good to see you.
Great Monday today. There you go.
Thank you.
Yeah, we're glad you're here, Norm. It's true, when the stock market takes a nosedive, people do tend to panic. Who will the next stock market downturn affect? And why?
Well, so it all depends on your age right now. You know, older savers are going to be the most at risk. You know, there's people in their 60s, 70s, and 80s that are actually drawing down on their retirement, you know, and they have a limited time to work, you know, for the rest of their lives. So basically, you know, when you think about the 2008 stock market crash, it actually took 6 years for people to recover their money that they started with. It's amazing. And nothing kills a portfolio quicker than taking money out, taking withdrawals out of a declining stock market. So I always advise people that if they need money and the market is going down, take it out of a cash account or a money market account.
Okay, you have this analogy called a three-legged stool. What is this analogy and how does it apply?
Well, it's all about income.
Okay.
So let's look at the first leg. First leg would be Social Security. So you look at Social Security over here, and of course the big question is, when do I take Social Security? Well, you could take it out at age 62 all the way up to age 70. But again, the question is, when is the best time and how do I maximize Social Security? And that's something that we do with our clients. When people come in, we do a full analysis for them so they don't leave money on the table. That's very, very important. The second leg would be the employer-sponsored plans. And that would be such as a 401k, a 403b. If you work for the government, it's a TSP or thrift savings plan. And then the third leg is retirement savings. So we all heard of traditional IRAs, Roth IRAs, money that you have in a money market, money that you're saving. And when you lump all of that together, that produces the income plan that retirees are looking for. Those are the three biggest ways for you to get it. It's just all a matter of when do you take it, and that's something that we do with our clients as well.
You help people with that. That's right.
Oh, absolutely.
Why is it important for retirees to have a written plan in place that protects funds from a major market correction?
Well, Colleen, that's a great question because everybody remembers the 2008 market crash. We all, nobody will really forget that. But it is imperative that people are prepared for the next market downturn. We've had a little blurps here the past couple of weeks, but you know, it could be something where it could be a major one in the next year, maybe before that. Especially folks that are going to be retiring within the next 5 years. Those folks over here, the people that are earlier, you know, a little younger in their 40s and 50s, they have a lot of time. But people that are within 5 years of retirement, they should take a portion of their portfolio, move it into somewhere safe where they cannot lose it, but also they could lock the gains in when the market goes up, in addition to taking a guaranteed income for life, which I'm very passionate about. I always want to make sure that people have enough money that if they live until 80, 90, even 100 years old, they still have enough income coming in. And by the way, you know, it's funny, in 2017, 72,000 people made it to 100. Isn't that amazing?
Wow, that is.
And they're saying in 2050, 1 million people in the United States are going to hit 100 years old. So I know it's a great thing when you really think about it, but also on the other hand, you have to have enough money to make sure that if you do last until 100 years old, you have enough to live on.
I got to ask you, how diverse should that portfolio be? You mentioned that three-legged prong attack. Still, how diverse should you have your money?
Well, that's a great question. It all depends on your age. You know, let's say if you're, you know, just the basic means, if you're 60 years old, you know, you may want to have 60% of the money in a safe product. You may have 40% possibly in the market. So it all kind of depends on your age. You know, when you're younger, you want to have, and you're in your 30s and 40s, you're going to have the majority of the money because it doesn't matter if we have a major correction. You have plenty more years. But as you're approaching retirement, you should be a little bit more cautious. You know, at least take a portion of what you have and put it somewhere safe. You know.
Norm, great job. Thank you so much.
Oh, my pleasure.
You want to learn more? Blue Waters Financial is giving away copies of the top 10 things to consider when preparing for retirement. The number is 704-790-BLUE. That's 704-790-2583. They also offer complimentary consultations. Call them now to sit down and talk about your retirement for free. Again, 704-790-BLUE is the number to call. Norm Shapiro,
thank you
very
sir.
much.
Oh, it's my pleasure. Thank you very much.